Welcome learners in the next session, and in the today's session we will talk about the primary and secondary markets. So again I Priyank Sharma from School of Management Sciences Studies, Swami Rama Himalayan University welcomes you to the session. And in the today's session we will talk about the primary markets and the secondary markets. So let us have a look. Actually it is a more crucial concepts of the financial markets, that is what primary and secondary markets. So whether you plan to become an investment analyst, entrepreneur, or simply manage your own finances smartly, understanding how these markets work will provide you a tremendous advantage. Okay. So whatever you are doing in the finance field, so you have the knowledge of this market. So let us come or dive into these markets, why they matter and how they impact everything from company growth to your future investments. Okay. So let us talk about the primary markets firstly, thereafter we will move towards the secondary market. So primary and secondary, both the markets are the pillars of financial ecosystem of the country. They enable the flow of capital, ensuring money moves from savers and investors to those who need it, like business or governments. Okay. This actually markets plays a major role in the movement of the economic funds from the persons those who have and to the people those who want it. So whether you go into banking consultancy or start your own business, a solid understanding of these concepts is essential. So we will today explore how companies raise funds, how investors trade securities, and how this interplay builds economies. That is what we will talk about. So let us talk about the primary market, or what are the primary markets actually we will talk about. So the primary market is a market where new securities or new shares are created and sold. Let us think of the birthplace of the stocks and bonds. We can talk like this: it is the place where stocks and bonds are created. So here companies or government raise money directly from investors through the method of IPO, that is known as initial public offering. It is a classic example. It is when the private company first offers shares to a public. So IPO is the process by which a private company offers its shares to the public for the first time by listing on a stock exchanges. They can list on any of the stock exchange, that is Bombay Stock Exchange and National Stock Exchange. Okay. So as far as definition of the primary markets are concerned, or IPO is concerned, so IPO is the first sale of stock by a company to the general public and transforming it from a privately held entity into a publicly traded company. That is what the more about the IPO. Thereafter, features of IPO or major features of initial public offers that we can talk about. The what are the major features? First is capital raising. That is the main purpose of IPO. So the company raises funds from public investors to finance expansion or to repay debt. It may be for invest in new projects or improved infrastructures. Okay. Second one is ownership dilution. That is, by issuing the share to the public, the original owners give up a portion of their ownership to the persons who are going to purchase the shares. Third about the IPO is stock exchange listing. So, after the IPO, the company's shares are traded on a stock exchange in the secondary market like NSC, BSC, New York Stock Exchanges, NASDAQ, etc. Thereafter, the role of underwriter is there. Underwriter is a person who takes the risk to sell off the share. So, in investment banks can be the underwriters, helps the company price the share, market the offering and manage the regulatory process which are by the underwriters. But it is not just stocks, government bonds, corporate debt and even municipal securities can be issued through the primary markets. So, these are some instruments which can be issued through the private markets. So, the investment banks typically underwrite these deals and helps in pricing of the shares, promotion of the shares and some regulatory and compliances by the stock exchanges and the SEBI. This is where a foundation of future trading begins. So, if you want to trade the particular shares in the market, so it is what the foundation. Now, what are the roles of primary markets? Now, let us talk about the role of the primary markets in the economic development. So, as we know that these markets rotate the money from the savers to the investors. So, first one is capital formation, as all the markets help in the capital formation, same with the primary market also. So, company uses these funds that is generated by the primary markets to expand operations, invest in research and development or build infrastructure, all of which contribute to economic growth. That is what the first economic development. Second one function of primary market is price discovery. So, the initial price set during the IPO, that is during the process of initial public offer or bond issuance, act as a benchmark for investors. It also provides signals to the market about the company's potential. Let us have an example that is which comes to my mind. It is an example of Snowflake's IPO in 2020, which raised about $3.36 billion. That was not a funding event, which signaled or it signaled investors' confidence and attracted huge market attention. So, it was the largest software IPO in the history till now. Snowflake's $3.36 billion raise set a record for software companies going to the public sector for the purpose of raising the funds. So, it happened due to the high investor demand. So, due to its strong growth and recurring revenue model, institutional investors scrambled to buy the shares, causing this stock to more than double on the day one. And the second one is backing of a big name, that is Warren Buffett's name. Warren Buffett Berkshire Hathaway invested approx $735 billion, a rare move for Warren in the tech IPO space. Salesforce Venture also bought, that is the Salesforce Venture is also a company which bought about $250 million worth of shares in the particular IPO. Strong growth metrics. Why always these particular companies came and invested? They have the strong growth metrics, that is revenue near doubled year on year before the IPO. Before launching the IPO, they have a good revenue trends aimed to disrupt the traditional data warehousing and market dominated by Oracle, IBM and others. So, these all are the factors due to which these company able to secure the highest funds by the investors. So, primary markets are where investment begins, that is leads to fueling innovation, expansion and employment. Now, coming to the secondary markets, what are the secondary markets? And once a company issued the shares through IPO, The company's securities are issued, they need a place to be bought and sold thereafter. Where comes the secondary market? So, after the issuance by the primary market, they are traded in the secondary market. This is where the investors trade existing securities. That means securities which are existing in the market, secondary market is the place where it can be sold. So, the original issuer, say a company like Apple, does not receive any proceeds from these trades, it is purely investor to investor. The secondary market is critical for liquidity, which means investors can quickly sell their holdings if they need it. That is what it is required for the purpose of liquidity. Examples like stock exchanges of India, that is Bombay Stock Exchange, New York Stock Exchange of New York, Nasdaq for England, and these all stock exchanges. So, these platforms actually provides price updates which reflect the market sentiments and allow securities to remain dynamic and tradable. That is what the function of secondary market. And more functions of the secondary market includes, like it provides the liquidity as well and trading facilities. The secondary market is not just a platform or trading avenue, it performs three functions essentially, or we can say that the functions of primary or secondary market, that is majorly secondary market, can be categorized into three functions. First is liquidity, that means investor can exit investment easily. This builds confidence and encourage broader participation by the investors. The second one that is performed by the secondary market is price discovery, as we talked about the previously also. So, market forces supply, demand and news which affect prices in real time. This ensures that prices reflect actual value and sentiments of the people and the effect of the particular news on the markets. Thereafter, the third service which is, or the third function performed by the secondary market is investment analysis. So, daily trading data gives insights for market forecasting, risk management and trend analysis. So, let us have some data about the market of New York Stock Exchange. So, it is a static in 2023, the New York Stock Exchange average daily trading volume was approx $45 billion. This shows that a sheer scale and importance is the market in ensuring the capital mobility. Now come to the key differences between the primary and secondary market, that is what are the major differences in the both the markets. So, let us compare these markets, that is primary and secondary market, and to understand their unique features. So, let us see what are the unique features of primary and secondary market. So, firstly we can say that issuer involvement, that is direct company to investors. On the other hand, secondary market is indirect, that is investor to investor, trading helps between. Second point is purpose of capital raising versus trading and liquidity. In the primary market, the main purpose is capital raising. In the secondary market is trading and liquidity. Third one is pricing, which is set by issuers and underwriting in primary markets. In the secondary markets, the prices are determined by the market forces, risk and transparency. More information in the primary market, there is greater transparency in the secondary market. So, in the simple terms, the primary market is a place where securities begins their journey, and secondary market is the place where they are traded. So, both are essential markets for the Indian economy, and just like production and distribution in any supply chain. So, let us have an examples and interdependence of these markets, how these primary and secondary market are interdependent on each other. So, let us explore how these markets are interdependent and how they are something like that, one can't operate without the second one. So let's take this example to understand the interdependence of these markets. Say a company X issues bonds in the primary market to fund a new factory. That means the company is trying to raise the funds for the funding requirements of their new factory through a bonds. So those funds are then traded in the secondary market once they are issued. If trading is active and price rise, it shows the strong investor demands. So the next time company X issues more bonds, they can do so at better terms. So thanks to the secondary market for the performance, or what we can say, the secondary market stays the performance for the purpose of primary market. So let's have an example of Tesla, that is $2 billion bond issuance in 2021. It was heavily influenced by how Tesla's existing debt was trading investors in the secondary market. Essentially validated the new issuance. Convertible bonds are hybrid securities. They start as bonds, that is fixed income, but converted into company stock under specific conditions, which were used by the Tesla also. So this structure is attractive to the investors. What sort of structure? Structure of the markets as well as this particular convertible bonds, because they receive interest income, and what we can say, they gain potential upside if the stock performs the well. That means if the stock performs in a good position, they can have the good profits as well. So the context behind this issuance is like that. That means why they issued the convertible bonds is Tesla's strong market presence or strong market performance was there, due to which they issued such type of hybrid bonds or hybrid stocks. So Tesla's stock price surged over 700% in the 2020. That's what the second point, due to which they gone for that. Third one is its existing debt was performing well in the secondary market, due to which they go for the hybrid instrument and indicating investor confidence in Tesla's credit worthiness. So these were the factor due to which they go on further. Thereafter next one is low interest in environment. So the market conditions allowed Tesla to issue debt at very low interest rates, in some cases close to like approx 0%, I think so. So investor demands in the secondary market is also the next factor, due to which they gone for that particular hybrid instrument. So the Tesla's older bonds were trading at a premium, which make investors very confident and they are willing to pay more than their face value or the face value of the bonds which were trading in the market. This strong secondary market activity signated to Tesla that they can or they could successfully issue new bonds at a favorable terms whatever they want to issue or as per the favorableness of the companies. So the role of secondary market. What we are trying to do, we are trying to actually understand the role of secondary market in this particular case. The secondary market acts as a barometer or acted as a actually barometer in the case of Tesla. If Tesla's existing bonds were struggling, issuing new debt might have been a costlier or riskier for them. That's what the signal of the secondary market. But because of high demand and strong prices of the bonds in the secondary market, Tesla knew it could tap into fresh capital without diluting the equity or paying the high interest. They know that or these all things come from the secondary market. So how this demonstrate market interdependence? So these all contexts which we talked about, how would this particular demonstrate the market independence? So, the primary market actions were, what were these actions? Tesla issued $2 billion in a new convertible bonds to raise the capital. These are the actions of the primary market. Or in the secondary market influence, the favorable trading of previous Tesla bonds validated the market's trust, which directly influenced the pricing terms and success of new issuance. That is what the role of the secondary market in the issuance of the new bond. Investor confidence loop. So, the healthy trading in the secondary market, better pricing and demand in the primary market, both for Tesla to grow. So, that means these are the points of the primary market and the secondary market due to which the company grow. And let us see why it matters. And why it matters is like that, this is a real world example of how Tesla created the strategy of new bonds, and by taking into consideration the information the primary market and the secondary market. So, the secondary market affects the cost and feasibility of raising capital in the primary market. Okay. So, it is symbolic or symbiotic relationship. One market supports and validates the other, forming the backbone of a functional financial ecosystem. Okay. So, these are the example to understand the interdependence of financial markets, that is primary market and secondary markets. And this shows how primary and secondary markets support each other and form a word known as feedback loop that enhances efficiency and pricing accuracy in the bonds market when you are trying to issue the bonds. So, in the conclusion of this topic, we can have some points, that is the conclusion of financial ecosystem, and we can say that by wrapping this particular session, that the role of primary and secondary markets, that means the primary market is the where the capital is created or capital is raised through the different modes. On the other hand, secondary market is the place where capital flows freely or by trading. So, both the markets, that is primary and the secondary market, are vital to a functioning financial system. Okay. So, from this session we grab that both the market primary and secondary support each other, and they all support the entrepreneurial growth, government funding, investor access and liquidity, market transparency and valuation, and understanding how they work will help. So, we can have some more examples to understand the concept. Okay. So, in the today's session we learnt about the interdependence of primary market and secondary market, and that is all for the today. Thank you for the today's session. We will see you in the next session. Thank you.